All incomes are classified into 5 types as per Section 14 of Income Tax Act, 1961 of India. 1. Income from salary. Income from salary or pension is charged to tax under this head subject to conditions. In order to be called as salary, there should be an employer and employee relationship between the payer and payee. 2. Income from house property. Rent or lease. Rent earned by letting out of residential, house, commercial property is regarded as income from house property. 3. Profits and gains of business or profession. Incomes earned from doing business, trade, manufacture, profession are charged to tax under this head. 4. Capital gains. Profits or gains arising out of sale or transfer of capital assets, example, land and building, plant and machinery, shares etc., shall be charged to tax under the head capital gains. Capital gains are of 2 types, STCG/LTCG, short-term capital gain or long-term capital gain. 5. Income from other sources. Any incomes that are not earned under the above 4 heads of income are treated as income from other sources, e.g. winning from lottery, betting, TV, game shows, dividend, interest income etc. Types of income tax payments. 1. TDS/TCS payment, tax deducted at source or tax collected at source. The Income Tax Act says that any permissible payment shall be paid after deducting prescribed percentage as tax which ranges over 1 to 10%. Example, deduction against payment of interest, commission, rent, salary, dividend etc., and the deducted TDS has to be deposited in the government account. 2. Self-assessment tax. This has to be paid by the assessee as per his own calculation, tax consultant, auditor. 3. Advance tax. Section 208 deals with advance tax. Every person whose estimated tax liability for the year is 10,000 rupees or more, shall pay his tax in advance, in the form of advance tax. 4. Tax on demand. This has to be paid when the income tax assessing officer raises a demand against an assessee to pay. Deductions and exemptions. Deductions means subtraction or deduction means the amount will be subtracted from the gross total income of the taxpayer or the total taxable income, refer Chapter 6 Section 80C to 80U, and deduction is allowed subject to certain conditions and as per the rules which could be full or part. If gross total income is nil, no deduction is allowed. Exemption means exclusion or which is not liable to and the income is not charged to tax. Exempted incomes are the incomes which are not considered while calculating the total income, example, agricultural income. Tax-free incomes, Section 10. Tax-free incomes are the incomes on which one need not pay any income tax and are exempt from income tax, example, agricultural income. Section 10 provides you the list of incomes which are exempt from tax. Please refer the Income Tax Act, 1961 for more details and latest information. Dates and rates of tax are subject to change from time to time. Thank you.